Good afternoon, everyone, and welcome to the Al-Tamimi Arab Health webinar for 2021. This Arab Health webinar is titled Structuring, Restructuring IPO and Capital Markets in the Healthcare Sector. I'm Andrea Tythcott. I'm a partner in the firm and I lead the Healthcare and Life Sciences practice. And it's our pleasure to join you through Zoom land this year rather than in person as we would normally do for reasons that are obvious to all of us. But thank you all for joining us for this session today. I will introduce our speakers for the session today and then explain a little about the agenda and how we will operate this session. So firstly, I'm joined by my partner colleague, Andrew Tarbuck, who is head of our capital markets practice for the region at Al-Tamimi and very active in the IPO and capital markets sector. My partner colleague, Isabella Sadskowska, who is our corporate structuring expert and very active in healthcare transactions, including IPOs in the healthcare sector. Mansour Ahmed, a director, research and advisory consultant for healthcare education and PPP for the MENA region at Colliers International. And Mansour is very active in publishing articles, speaking at events such as this, and is a very recognized expert across the industry. And finally, Gemma Wild, the education and healthcare sector lead at HSBC Bank, and HSBC, of course, very active in supporting clients in the healthcare sector. So next slide, please. Moving on to the agenda, I'll just give a brief overview of how we're going to run the session today and where you all have an opportunity to contribute. Firstly, a quick introduction from me, and then a brief overview of healthcare structuring and restructuring in preparation for IPO, presented by Isabella and Andrew. We will then move on to the panel discussion, where we will bring on board Mansour and Gemma. We will then have time for questions and answers. And at this point, I should say that as we're on Zoom, you'll find a Q&A link towards the bottom of your computer screens. Please click on the Q&A link to ask any questions that you would like to put to our delegates. Please don't use the chat function, use the Q&A section, and then that will come directly through to me, to my computer screen here, and I will moderate the questions both during the panel session and afterwards so that we have enough time for questions. And then lastly, we will close with some concluding remarks. We're aiming to finish at about 5:45. We'll see how we go with the timing. We want this to be a free-flowing dialogue, not only between our panelists, but also to allow all of you time to ask your questions. There's nothing as good as free legal advice. So get your fingers on the keyboard and type away your questions, and we won't send you a bill at the end of the session. So just a quick introduction from me, if we could move to the next slide, please. Normally, of course, we would hold our annual Arab Health briefing here at our DIFC office. And although Dubai is opening up to some extent, we decided that we would host this webinar through Zoom rather than in person, because not everyone is able to travel and we wanted as many of our clients and friends of Al Tamimi to have the opportunity to hear our presenters and to participate in the session. And hopefully next year, when things get back to normal, we will hold an in-person session. As always, with our Arab health topic, there's a great debate internally as to which topic we should cover. We are a full service law firm and we cover absolutely everything in the healthcare sector. But this year, I think the topic chose itself because for many reasons, which are obvious, healthcare restructuring for many healthcare organizations in the Middle East has been very active space, either because businesses wanted to restructure or needed to or were forced to. It seems a very timely subject to cover in terms of our annual briefing. But also, according to the Arabian Business News, the IPO capital market sector is very active. There have been a number of completed transactions in 2020 and a good deal flow in 2021 as well. And Arabian Business News has described 2021 as a turning point for IPO and capital markets across the region. So it really is a must-know topic. And on that note, I will hand over to Andrew Tarbert, who will take us through a typical project pathway. Gemma, next slide, please.
And if you can actually go on another further slide as well. Okay, project pathway, that looks very mysterious, doesn't it? So before we move on to the next slide, just a little brief introduction. My name is Andrew Tarbach. I'm the head of capital markets here at Al Tamimi. I've been practicing M&A and capital markets for 25 years, both in London and the last 14 years here in the Middle East. And it's interesting that my practice is generally sector agnostic. So I've covered IPOs of telecommunications companies in Palestine and Iraq, through to National Commercial Bank in Saudi Arabia. So generally speaking, I tend to move with whichever industry sector is showing a particular interest. And it's interesting that really the driver behind that is obviously the market itself. What are investors actually interested in? And what are they willing to see in terms of return on investment? What are the sectors that are really exciting them? And most investors obviously are driven by financial return. But I think one factor that has been a real phenomenon, particularly in the last year and a half to 2 years, is ESG investing. So that's environmental, social, and governance investing. And this is a feature whereby asset managers, investors are actually looking to invest on not just the basis of a return on investment. It's really an assessment of the investment's environmental, social, and governance credentials. And it's really, really interesting that what I am seeing is a real interest in the healthcare sector. And part of that from the investor side. And part of that is driven by this ESG phenomenon, because obviously it fits very, very nicely into a lot of investors' credentials and benchmarking for providing ESG back to underlying clients. So what I'm seeing in the market is really sort of two things. Certainly a growth in healthcare and the healthcare sector as an investable sector. And that is because I think principally around ESG, but also because of the fundamentals in the business. And, you know, healthcare, say education and tech, those are probably three key industry sectors that we're seeing at the moment are particularly popular. But that's to do with economic fundamentals, as well as this ESG concept. And, you know, the healthcare sector is obviously of very great interest on the government side of investing. It's also from a pro bono investing, from a sovereign wealth fund investing, from a public policy investing, through to large foundations like the Gates Foundation, etc. So philanthropic investing, and such philanthropic investing is actually huge numbers. And so, for example, in Africa, the Gates Foundation, what it is doing and how much it's actually divesting is absolutely huge. The numbers that we're talking about from these philanthropic investors is absolutely huge. So what it means is that there is a great deal of interest in the healthcare sector. And that interests me from a capital markets side. And we're finding that clients, either from the issuer side, where there are healthcare related companies that are looking to monetize or raise capital via the public markets, or maybe through strategitic M&A or through a strategic investment, they are coming to us looking for options. So we're finding that there's a lot more healthcare companies out there that are actually coming to us for growth advice. Then obviously we have on the investor side who are looking to invest and sponsor these sorts of projects, and actually on the advisory side as well. So we're seeing from both sides of the market, and we're advising on both sides of the market. So if we go on to the next slide, what we thought might be useful for the attendees on the webinar is actually just to run through what might be the higher level elements in an IPO. So I don't know if we can move to the next slide, that'd be great. Next slide seems to be stuck. Anyway, not to worry, the slides will follow. As with every large capital markets transaction, there are a lot of moving elements, and trying to get a capital markets lawyer to actually put on one slide what is the process is virtually impossible. I am not going to bore you for the next hour and a half about all the mechanics of an IPO, because this is obviously my kind of favorite subject. This is my mastermind moment, but you don't have time to listen to me talking about what I do every day. So I'm going to try and run through this. There's actually, in each of these 4 buckets, there's many facets as we go along. So please feel free to ask questions as we go, and I'll try and answer them as we go if I see them. So if you've got questions, please do raise them. But one thing that I would say around the general scope of work for an IPO is don't underestimate just how large these projects can be. And whenever you are faced with a large project, everybody will say that preparation is everything here. So in many respects, the practical advice before we get into any of the process is start as early as possible and get your advisors on board, because with these transactions, there are a whole raft of advisors that need to come together. Obviously, there's the client that, if it's the issuer themselves, so that's the company. The company has its own lawyers, but also there's underwriters, which is the bank effectively, and the bank will have their own lawyers. There may be valuers as well, and all sorts of other advisors that could get involved in an IPO transaction. And so getting the right advisors on board early is just a piece of practical advice that I would say to attendees. And I was actually given some great practical advice by the chief operating officer of DEPA way back in 2009 when they listed. And she said that one of the key things when choosing your advisors is actually chemistry. And I thought it was a fantastic concept, that effectively in these large processes, all of these advisors need to come together, but they need to get on. And it's quite simple that, there should be a group of advisors that are all driving towards the same objective. They all know what they're doing, and effectively they get on. And so it's very important to choose your advisors correctly and choose them at the early stage. So as I said, preparation is absolutely key. The whole IPO process, it's worth saying, generally speaking, you're looking at a minimum of around about 6 months as the shortest time frame. And it can go to 12 months, 18 months. Sometimes it depends on the market, and it depends on, there might be issues with the issuer where there is delay to the process. But the idea in your head is, if you're actually contemplating an IPO, is really think of a sort of minimum of 6-month period, moving to 12 months potentially, and then 18 months. But there's many facets of that timetable that can impact how long the timetable actually is. And look, I've done an IPO. The shortest one I've done is 3 months, and then the longest ones you haven't heard about them yet. So essentially, managing the expectations of the client and the issuer is very important, to work out just exactly what everybody's doing, what their responsibilities are, and what's the time frame for their various deliverables. So that's the initial process. So if you like, that's the invisible box on the far left-hand side that you can't see yet. So that was the free advice that Andrea was talking about. I will be raising an internal bill for this, but she doesn't know about that yet. So if we look at the first box in the process, the identify and review target areas. Now, essentially, this is very critical right at the outset, that we found, certainly from experience, and Isabella will come into this a little bit more when we go through the case studies. Quite often, the healthcare companies that we're working with are very big, and they encompass some very large subsidiary structures in multiple jurisdictions. So quite often you will see that they're cross-border, multi-subsidiary, so it's very challenging. And the idea is to really get a grip at the outset, just exactly which companies, which entities, whether it's branches, limited companies, which entities are actually going to be a part of the project and actually part of the IPO.
And on that note, that's actually a very valid point. Every now and again, companies that we talk to say, well, is there really a need for you to look into our branches? Do we have to analyze the legal side of operation of all our subsidiaries? The target of the transaction is only this one entity. Can we not just limit that exercise to that one entity, right? And then it's good for you to keep in mind that we are looking into the business as a whole, wherever there are ownership links or control links, because a lot of those considerations need to be aligned with your audit considerations, with your financial statements, with consideration and consolidation under the financials. When the business undergoes the valuation, right, it is very likely that more than one entity will fall under that process. And this is why we often look into branches, subsidiaries, other related entities to make sure that we cover the entire structure under that analysis before the transaction materializes.
Oh, absolutely right, Isabella. So really, the scoping exercise is the first piece, and obviously the company needs to be completely happy with what group companies are going to be involved in the process. The auditors need to be happy from a consolidation point in terms of creating financial statements, and also just from an operational perspective, are the various elements of, let's say, the larger group that are actually ancillary but irrelevant to the listing, if you like. So what you do find is, with the very sort of large conglomerates, they might actually have bolt-on businesses which are not relevant to the actual IPO process. And what you're trying to do when you're going to drafting your prospectus is creating an equity story, which is essentially what's the story that you're telling investors why they should invest in your company. And obviously, one of the classic examples would be, well, look, you own hospitals, but you've got a car automotive business in Saudi. How does that work? Where does it all link in? And sometimes you do actually have to hive off certain elements of the business, and you would sell off certain parts of the business if needs be. So once you've pretty much decided what is the IPO going to look like and what is the group that you're going to be IPOing, you'll do a legal due diligence review. Now, this goes alongside a financial due diligence review as well, and there may well be an operational and feasibility review, which is where you're getting into Mansour's territory, and also from HSBC's side, the financial due diligence is obviously of great interest. So due diligence is essentially a very sort of detailed dive into the nuts and bolts of how a business is actually run. And this drives really two main things. One is any barriers to actually proceeding with the IPO. Is there something in there that might fall away that would be so detrimental to the fundamental running of the business that it just wouldn't allow the business to move forward with the IPO? So a classic example would be around licensing. Obviously, a license is something that you don't have a, if you like, a monetary value in terms of a material contract for any company, but it literally is the lifeblood for a regulated company, such as a healthcare company, to move forward. So not that there ever, I've never seen one, but there may be somewhere in the licensing or the regulator that says, you know, a regulator needs to approve any public offer of securities. So that would be a classic example.
That would be a classic. And one other example that comes to mind that actually we usually think, you know, practically wouldn't happen, but under some IPOs, we may also see issues with the title to some really huge strategic assets. Under one of the IPOs that was read years ago, that's really what then the due diligence highlighted, that the ownership of the assets was actually not with the business, it was with individuals who own the business, and assets were subject to such restrictions that prevented transferability of those assets to the business. That really negatively impacted valuation of the entire business. And then as a result, the transaction didn't proceed, right? So that's yet another example of some of those really huge findings that are detrimental to the deal.
Absolutely right. And without getting too much into the weeds, because I could literally flag about 10 examples on each of these bullet points in the legal due diligence review, from, you know, battle-hardened war stories. But one of the things that is quite relevant, particularly in the Middle East, is quite a lot of businesses are actually family-owned businesses or part of a family-owned conglomerate. And I'm not going to name names, of course, but you probably know roughly what I'm talking about. But sometimes there is a principal shareholder who gives either personal guarantees or personal loans to the entity. Now, that sort of funding is not appropriate for when you're a listed entity, because effectively, you know, that's a personal liability given by what is the major shareholder. But obviously, going forward, the company should be owned by a whole multitude of shareholders, and that exposure and liability should not be taken on by one particular shareholder. So you find that as a classic example, particularly in the family business space, is you have to effectively move out personal guarantees and or personal loans from shareholders into proper third-party banking relationships. Anyway, so I talked about there's two limbs to legal due diligence. One is this red flag type concept, but the second is, what do we need to know about this company that we can then disclose to investors in the prospectus? So the legal due diligence drives what we can then think about are the material contracts, for example, the key competitive aspects of the company, and what are the fall down issues. So things like license, regulatory approval, bank financing. So all of these elements we can then disclose properly in the prospectus. One other element is we do obviously look at any litigation cases, and in the healthcare sector, there's high likelihood of med-neg situations. So, say like in a real estate company, there can be, a multitude of smaller, if you like, tenancy disagreements. You will also have, a raft of med-neg situations, and also maybe IP breaches or infractions where you're actually suing. So litigation is very much a part of the legal due diligence review, and I think it's very pertinent in the healthcare sector. But what that then drives is the disclosure, because potential investors want to know any material litigation that the company is involved with for natural reasons. So what you will find is that the legal due diligence review around the litigation is really driven towards disclosure in the prospectus. We then literally, the work product that comes out of that is a due diligence report, which everybody pores over, asks a lot of questions. It sends a lot of bankers to sleep at night. Hopefully it doesn't mean that they don't lose sleep, because there's a lot of issues. But the idea is that you'll end up with a legal due diligence report, you'll have a financial due diligence report, and you might have a feasibility valuation report, etc. So moving through to the next box, legal opinions. I don't tend to really give too much time to this one, but it's effectively, these are the legal pieces of paper that gives comfort to the underwriters and the banks that effectively the IPO can proceed, and also the various arrangements from the underwriters, because the system of underwriting, just so I can explain for 20 seconds, is that the underwriters will underwrite any offer. So if you're making an offer of shares to the public, if there's not sufficient take-up, then effectively the underwriters will take up the shares. Now, that doesn't really happen in practice because the deal has already been done. But the idea is that the underwriters or sponsors will want to be comfortable with what they're doing. So they will actually ask for a raft of legal opinions and warranties. And the legal opinions will come from the lawyers, and the warranties will come from the company in the form of an underwriting agreement. So that's the, if you like, the extremely boring part of this process. And it's kind of, I would say, leave it to the lawyers. And we tend to negotiate the underwriting agreement as one of the sort of principal agreements. But again, it's really a matter of going through the process and getting the underwriters comfortable with sponsoring / underwriting the deal. So the next main bucket is around the prospectus. Now, this is effectively the offering document which underpins the information that's disclosed to potential investors. Now, obviously, what's written in there needs to be absolutely correct. That's the first major issue, is that it must be factually accurate, but it must also not omit anything that's material to investors. So the general disclosure requirement for the prospectus, which is literally, a 200 to 300 page document with all of the information that investors should know. The basic disclosure requirement is to include as much information to allow an investor to make a reasonably informed assessment of the assets and liabilities of the company. And it doesn't omit information that would be important to make that assessment. So it's very, very important that obviously the advisors are comfortable with the disclosure, but also that the company is very, very happy with what it is saying about itself. Now, there is some pushback to levels of disclosure where the company may say, well, look, we don't want to say that. Now, the general concept around this is you have to say about the bad things and the good things. So if there's litigation, it has to be disclosed. If there are risk factors around the business, that has to be disclosed. But the idea is that if you put a lot of risk factors, which is effectively putting investors on notice about the problems or the potential problems with the business, then effectively it's actually protecting the company. Because if an investor comes back in 6 months' time and says, oh, well, look, the exchange rate fluctuated so much that, you know, this investment didn't work for me. It's like, well, we put a risk factor in there saying, you know, there could be exchange rate fluctuations. You know, for example, the AED may depeg to the US dollar. Those are the sorts of things that you'll put in there. And actually, the more risk factors you put in, the more mitigation there is for the company. And this is a really often argued point with the company itself, because the company is saying, well, look, why do I want to put in there that I might lose my license? You know, we could get sued for this. You know, and then it's a balancing act, because as a lawyer, if I'm acting for the company, I'm trying to encourage additional disclosure around risk factors and disclose as much as possible. So you create this document, which is essentially the fundamental offering document, and there's minimum requirements for disclosure depending on which stock exchange you actually list on. So there's a whole bunch of other factors that we can go into in the IPO process, but I think I'm actually probably starting to bore myself with the level of detail that I'm going into. So all I will say is, once you've got to the prospectus stage, there is obviously what we call investor education, where you take that prospectus and you roadshow the company off the back of the prospectus to potential investors. And then hopefully they all want to buy in, and you have a successful IPO, and the company will then become a listed company. And the obligations of listing a company going forward, we will have to leave for another session at the Arab Health Forum, because that will take a long time. But the point to make is, once you're listed, that's just the start of the journey. And it's all around transparency and disclosure to the market and maintaining good corporate governance. So I think at that point, I will leave it, and Isabella will go through a couple of case studies where hopefully we can bring these things a little bit more to life.
Thank you, Andrew. If we could go, Joanna, to the next slide, please. I think it was really very interesting, and especially that discussion around the prospectus and what Andrew mentioned around the risk factors. It's a lot of us have very similar experience. We want the company to disclose a lot and for its own protection, to make sure that the market is well aware of the internal issues. And the good news is that in the context of transactions, really a lot of parties involved in those transactions and looking at the securities as a potential opportunity for subscription, they realize that those risks are also there to be transparent. So it doesn't have to really determine their choice to subscribe to shares or not. They know the risks will be there. In the context of that transactional side of things, I wanted to share with you some practical examples, tell you a little bit about things that have been happening lately. There has been a lot happening, but there are a variety of healthcare sector transactions that we as a firm have been involved in, and a variety of contexts in which actually your business can be involved in a deal. You might be thinking, well, but are we really interested in an IPO? Maybe not, but maybe there is a transaction where you would like to have a strategic investor, maybe a private equity house, come in and subscribe for some shares in your share capital, right? And the examples I want to share with you are a transaction that was more of an M&A transaction really than an IPO. We advised a private equity firm, Mar Capital, in relation to an acquisition of a strategic stake in our neuro-medical company. That was a few years ago. And interestingly enough, then we looked at the healthcare sector entity at Al-Noor as a target from the investor standpoint. So of course, we conducted a due diligence over the business itself, and we were then focusing on our client coming into the business that they don't know a lot about at this stage. As their advisors, we're supposed to make sure that we learn more about the legal structure of that target they will be coming into. And of course, that Mar had other advisors as well, looking into financials and some commercial aspects of the target, but that was one of the contexts. And again, a slightly different experience than really advising the selling shareholders or the target or the issuer, right? And another context for transactions in the healthcare sector was a very interesting transaction that actually carried on for a while. Al-Noor Hospital, many years ago, started thinking about listing its shares on a trading platform and then offering some of those shares to the public. And initially, they considered Abu Dhabi Securities Exchange as a market. And then we, of course, went through the due diligence. We were looking into potential risk factors to disclose under the prospectus. At some point in time, they actually opted for a different market, and that for us advisors was quite challenging because, of course, the requirements depend on the market where the shares are going to be listed and where the offering is going to take place, and these are not always identical things. Sometimes there will be a listing on one market but offering in many markets, right? So it's not always the same thing. But that meant that we looked into the business of Al-Noor as the advisor to the issuer under that scenario, specifically for Abu Dhabi Securities Exchange, and then as a local counsel in relation to the London Stock Exchange, where, of course, there was a need for the qualified lawyers based on the ground in the United Kingdom. A transaction that I think many of us found fascinating, and it's not only for lawyers, it was also for other advisors involved. And I would like to believe for the company itself, for the management, it was after DM Healthcare, a sector transaction, an Indian-based issuer issued shares and offered them to the public in India. The listing took place on two exchanges, actually, the National Securities Exchange and the Bombay Exchange in India. But the chunk of assets of the group were based throughout the GCC, with a number of them in the UAE. As you would know, there are Astra pharmacies in the UAE, in Oman and Jordan. There is really, a lot of presence by that group. A very interesting project. One thing that all those projects do have in common is that if we are able to start looking into those businesses early on, we will probably have enough time to, first of all, identify potential legal areas that may need to be restructured or maybe remedied. Maybe some assets need to be transferred. Maybe we actually need to do the capital structure cleanup, or maybe change the board related governance, right? So the message is clear. The earlier you start having someone look into the business and identify issues, the more likely it is that when you're ready to actually invite that opportunity by an external investor, or you want to do the transaction by way of, for example, doing a private placement or an IPO, your business will be in a shape that's good enough for you to then meet the timeline that has been designated by the management to actually complete that transaction. Over to you, Andrea.
Thank you, Isabella. Joanna, if we could move to the next slide, please. Thank you. At this point in the session, we're going to move into the panel discussion, and we're going to bring in our experts, Mansour Ahmed and Gemma Wild. Firstly, Mansour, I'd like to turn to you, if I may. Colliers International, and I don't want to do your piece for you, but everyone knows Colliers International. You probably work on most of the healthcare projects across the Middle East in terms of feasibility studies and being involved from very, very early stage. Can you give us, please, an overview of the market, the UAE, the wider GCC, what you currently see as happening, and where the opportunities lie?
Yes, hi. Thank you, Andrea. So Collier, as we are working across the region, and the market has changed, seen up. So there was a fundamental shift in last 4-5 years from a big hospital to more specialized hospitals and center of specialities focus offering. But COVID actually accelerated that thing. The things which we thought that were going to take 2-3 years to implement, because of the COVID, people start looking more alternative way to focus and expand. So I think the market where, if you look at the market where the key market for us, where we are doing most of the work is, number one market is Saudi and Egypt. These are the two markets where most of the new greenfield healthcare projects are coming, and they are the traditional tertiary care hospital, but at the same time there is focus on long-term and rehab, home care, and also specialities. Like, for example, there are the specialities like focusing on dialysis, focusing on pediatric care, focusing on anything relating to lifestyle diseases, hypertension and diabetes and anything relating to that. So I think if you ask me, that the market where we are most busy is Saudi and Egypt. Whereas in UAE, what we have seen is that there is more and more focus on specialization. Because if you look at the overall number of beds in UAE, the demand and supply is more or less equal. You don't need a lot of more beds in Dubai. But where is the focus is, and how UAE is basically projecting itself, rightly so, focusing on the medical tourism. So looking at the different specialities which they can focus within the country and focus regionally and target the basically medical tourism also. So these are the three major markets: UAE, Saudi, and Egypt. These are the three markets. There are other markets also, but these are the three markets where we are probably doing our 80% of the work.
Thank you, Mansoor. If I could just ask you, with regard to that market overview, do you see a difference across the region in terms of whether the projects are mainly private sector or exclusively public sector, or under new PPP arrangements? Is there a spread in demographic?
Yeah, I think if you look at PPP is something which most of the countries in the region have focusing on, but this is still a niche market. Very few projects are actually implemented and completed in PPP. So we think that till there are enough projects, at least 5 or 6 or 7 success stories, there will be, then people will, so then there will be more PPP projects will be offering. On the other hand, there is, the government is spending the money and they're making the new hospital, but most of our work and most of what we see is coming out of the private sector. So the private sector is the main focus, which we see across the region. And there are basically 3 sets of investors, I would say. One is that existing big player who already are in the market. I don't need to take the names, and you have multiple hospitals and 500 plus beds or so across the region. They are looking to expand. They are looking to expand into 2 fields. One is from the main cities to the second tier cities and third tier cities. And second is, instead of just having the tertiary care general hospital, they are basically establishing center of excellence, diabetes, IVF, dialysis, and others. So these are the one set of investors who are already in the business. They know the business, and now they are looking that they need to basically diversify into regionally and diversify in terms of services they are offering. Second type of investor we are looking is they are the private equity funds or even the family houses and others who don't have any basically they don't have any direct link to the healthcare. they consider healthcare as a diversification, and they consider healthcare as a safe bet to invest in a sector which will give them regular income. So we have seen those. They are normally, they go and invest with second tier and second tier. When I say, I'm not talking about second tier healthcare player in terms of quality, but in terms of number of beds and what they're offering is second tier. So they invest with them because these second tier healthcare player, they want to expand and go to the later stage at IPO and all those sort of things. And the third thing which we have seen is after although the real estate market has bounced back, especially in UAE and especially in Dubai, but what we have seen is that a lot of developers, they, instead of concentrating and making a lot of shopping malls and hotels and that's another thing, is that where basically they are looking to invest in healthcare and education, where they look to develop the real estate side of it, and they would like to then partner with one of the existing player who will come and operate those hospital, or they just look at build a structure and they want to do a long-term lease on it. So I think that's basically where we see that who is investing and what kind of investment is coming.
Thank you, Ahmed. That was Mansoor, that was absolutely perfect, and an excellent segue back to the IPO topic, because we have 80% of projects happening in the private sector space. We have 3 tiers of investors: large investors, who are looking to do big IPOs; tier 2 investors, who are now diversifying into the healthcare sector. And then we have the multi-purpose investors who may be interested in real estate as well as healthcare. And a good example of that, I think, and currently very on trend, is kind of wellness resorts and those kind of developments in conjunction with hotel operators. And we're seeing that quite a bit now in the UAE and in Saudi, perhaps on the Red Sea development, where there are going to be a lot of wellness type resorts. So, I mean, we've got kind of 3 opportunities there where we plug in opportunities to structure and restructure these 3 tiers of investor and supporting them towards IPOs. And we've done an overview of an IPO project pathway, but perhaps we can talk a little bit now about these kinds of investors and where they would start. Where is their jumping off point into a structuring for an IPO? What objectives would they look at, and what high level of structure would be suitable for those kinds of tiered investors?
Sure. Well, Isabella, I mean, do you want to start off on this one, or yeah, okay. So, I mean, at the end of the day, whenever an issuer is thinking about actually starting its IPO process, we sort of talked about it a little bit at the start. Really, it's looking at who your investors will be, and I think you've made 3 really good buckets there, and they're all different. And obviously, you've got to work out what you're trying to do to attract all of those 3 types of investors, if that's the case. So one of the obviously very complicating things about the public markets is everybody's got different objectives. Some might be short hold, some might be long hold, some want dividends, some want dividends to be reinvested back into the company. So, in a way, right at the outset, when you're if you like trying to think about who you're going to sell your IPO to and create your equity story, you've really got to sort of think about who your investor pool is, and trying to attract obviously all those three different buckets is very important. And what are you actually trying to sell? What does this company do? Is it a real estate play? Is it a margin play on beds? Or is it a margin play on something that's a little bit funkier, like wellness, spas, or whatever it might well be? So it's really sort of trying to work out just exactly what investors you're trying to attract, and what are they looking to do, and are you trying to do a diversified package. For example, I talked about hiving off certain things. You may find that you've got a very traditional healthcare play, and then you're moving into something that's a little bit more diverse, and that's the one that's actually making all the money, and there's huge amounts of margin on it. And so you actually might just hive that off, and that actual entity becomes your listing entity, and you actually forget about what I would call bricks and mortar healthcare, depending on the type of company that it is. So when you agree on the objectives and the high level structure, that would be a major consideration, looking at the business as a whole. And you might either hive off something that's ancillary, or you might actually say, well, actually, there's something new and different here, and that's what we're going to try and go for. And one of the things that we see in the market, particularly in the UAE and the Middle East generally, there's a proliferation of really quite staid industry sectors of listed companies. So it's mostly financial institutions, insurance companies, and real estate and construction. So that's really the vast majority of public companies in the Middle East are in that sector. And then healthcare obviously is sort of coming up on the rails. But it's interesting that if you ask the investor pool these days, they want to invest in med tech. They want to invest in tech. And that's the thing, that's the buzz. So you might see, what are more sort of traditional healthcare players actually bringing on, say, med tech expertise. And that's actually where they pursue the IPO, not in, if you like, the more traditional areas of healthcare. And that would be investor driven. Everybody wants to be a techpreneur, and they want to invest in tech companies. And med tech it's out there.
Thank you, Andrew. And I think that really lends itself to the next topic of discussion for the panel session, which are kind of key drivers to restructuring, really, because that kind of traditional bricks and mortar model of healthcare delivery it's important, and it will be long lasting into the future. But we're really moving into a new operating model for many, many players, and that itself changes those key drivers and key metrics in terms of why the organization needs to restructure, efficiencies, consistency of product, across the board, if they're bringing in new services that perhaps are new to them because they're so technically driven. So, tell us about some of the wider key drivers for restructuring.
Yeah, that's actually a very, very valid point. I think years ago when I would talk to healthcare operators, they were interested in looking into their operations from the compliance standpoint mainly. But over the years that started to change, and it has started to change because, of course, healthcare business is like any other business. It's got to be profitable, and in order to be profitable, it means that the business needs to really modernize its operations. It needs to look into the staffing arrangements it's got. Over the years, legislation concerning, for example, data protection, and specifically the healthcare sector, where there is so much sensitive data that healthcare facilities have access to, even if it's research facilities. Again, there will be some samples, testing samples and things like that. And we've got economic substance regime that's coming to place, ultimate beneficial owners. But again, those internal issues that really drive restructuring. So compliance remains on the radar as one of those driving elements for restructuring. But more than that, we've got efficiency. For example, entities have been looking into how many entities they've got, what those entities actually do, where they are located, what assets do they have. Maybe there is a way to consolidate operation. And in some cases, there isn't an immediate transaction requirement. There isn't an investor just looking, but some businesses are proactively thinking, if we are to go out and actually bring someone in on the private placement basis, for example, we have to make sure we get our house in order. We have to get our numbers in order. And then, of course, profitability is going to increase if the legal side of things is in order. And we also have often especially for groups that are present in the region that have more of an international reach, we also have sometimes changes in the geographical focus, and those circumstances drive the due diligence exercise again, done for internal purposes at the internal initiative by the management of that healthcare operator, who essentially say, we are thinking about downsizing operations in some European countries, for example. It appears to us that really it's very expensive for us to continue having all this stuff in Europe. We've got to pay, you know, income taxes that are getting only higher. Inflation is very high, especially now with the COVID situation around the world. We would like to actually grow our operation in Southeast Asia. We would like the GCC MENA region, where we see so much, again, healthcare tourism, right, that Mansour actually mentioned. So those considerations mean that we need to then look into the structure, the licensing situation, the employment regime, and a number of other issues. So a variety of contexts, clearly.
And just to bring things a little bit up to date, actually, with COVID-19, and I think Mansour might have a view on this as well, is that we saw with COVID-19, a lot of entities started to look within themselves around cost benefit analyses and literally optimization of cost efficiency. And it's a huge thing. That's, you know, one of the buzz management consultants these days are around cost optimization. And so, you know, when you have a situation like COVID, I think you get a lot of companies, not just healthcare, that are looking internally to say, well, look, you know, do we need these branches in Europe? Are they profitable? How do we look at synergistic benefits? And so actually you're finding that with COVID, that's actually driven a sort of thought process, which in some respects has then thought, well, okay, if we clean our house up because we're doing that for cost optimization and for, you know, a reaction to COVID, and how do we look post-COVID, that actually sort of is out of the hopper. You're finding companies that are sort of almost sort of a little bit IPO ready, because they've done various processes that actually they're in a better position. And, you know, fundamentally, their actually operating model and their financial model looks a lot sort of more robust because they've gone through the stress test. So it's very interesting, sort of you know, an impact of COVID.
Thank you, Andrew. And on that point, I'd like to turn to Gemma Wild, Gemma at HSBC. Andrew's just mentioned cost optimization and organizations putting their, you know, financial house in order, you know, perhaps for general purposes as well as with a restructuring in mind. And clearly, as part of any kind of key driver for moving the organization on, financing and funding is a key metric in this equation. So tell us what HSBC are doing in this space. You know, HSBC will be supporting a wide range of industries, but is healthcare a particular focus for HSBC?
Thanks, Andrea, and thanks for the you know, the talk so far. It's been really, really fascinating. And actually, having worked in corporate finance myself for some time, a few years back, I actually echo so much of what Andrew was saying around the advisors need to get on, because I've been through so many sales processes where it's been a struggle because that hasn't been the case. Get round a table early, and then the shareholders sort of being aligned also, because even in this region, there's been many transactions where you get quite far down the line and you realize the shareholders have different expectations. And also we're looking at a number of IPOs at the moment and talking about what Andrew was saying about who is your target market. I think, you know, whoever your advisor is, you need to be thinking about them getting some anchor investors involved before you actually start the process to see what that appetite is, etc. But anyway, so that was just covering on those points which I really agreed with. So in terms of HSBC and our approach to healthcare, actually globally we support healthcare as a primary or top tier sector. So if you look at the market size of healthcare, it's around 11 billion according to the latest on Google. But as always, you can get a variety, 11 trillion, sorry, you can get a variety of numbers, but it's critically important for all markets, isn't it? And I'm now going into the dark. And that's ESG for you. Our sustainability has gone too far in this building. Honestly, it doesn't, the lights don't stay on for more than 5 seconds. And so for a global bank like ours, it's really important to support it in terms of its growth, efficiency, and also global connectivity, because we're in sort of 60 odd countries, really. So from a regional perspective, as has been said before, healthcare is very much aligned with the government's strategic objectives, which is why we decided to bring the healthcare sector approach to this region. And what I'm seeing really is echoing what Mansour said in terms of the growth opportunities. In terms of the 8 countries I cover, I would say UAE for healthcare is perhaps more on the consolidation front, and then the specialist kind of areas for development. Egypt from a greenfield perspective, so we're funding a number of greenfield projects in Egypt. Which is quite unusual because banks normally don't like greenfield projects, given it's all forecast led. But there's real demand in Egypt, and then of course Saudi. So I think the real positive for both sectors I cover, education and healthcare, is from an investor perspective. As we've discussed, it's a really sort of defensive sector, and therefore investors are quite keen on it. But in terms of sort of trends and other sectors, in terms of hot industries, healthcare and education, as I said, are resilient, and therefore we've started to see more activity and people thinking of IPOs. ESG, as Andrew mentioned, that's a key feature, but irrelevant of the sector really. Food security, but water is quite overcrowded. Retail is coming back on track, but companies are spending money to upgrade on online platforms. Tech has been mentioned, of course, but it needs to be something unique. So the Cafu app, sort of technology is more value than, delivery service, for example. And then family offices is a real focus for us at the moment, because as someone mentioned, I don't recall, that, they're looking for diversification, and also, education and healthcare has that philanthropic angle, which goes alongside nicely with the family office approach. But coming to the last point around sort of efficiencies, obviously from a bank's perspective, COVID was a big scary point for the banks, because how can you look at a business and actually say what's the future going to look like? Historically they've been trading well, but actually given COVID it's so uncertain. But actually, we've seen, of course, winners and losers in this space, and the winners have tended to be those that have got their houses in order. So have they got their costs under control? Are they now a really much more efficient business? And those are now the ones that have got a platform to move forward and actually grow in this market. And of course, in education and healthcare, you're going to perhaps see some of the smaller players, the ones that may have not been performing brilliantly before COVID, actually, unfortunately, not surviving, and therefore, again, those that are in a good place have got the opportunity to grow. Back to you.
Thank you, Gemma. And I don't want to put you on the spot or ask you to breach client confidentiality, but in terms of deal flow and transactions in the sector, this year been sort of active generally in this sector? Are you seeing a lot of requests for financing? Are you plugging into transactions?
Yeah, I think there's a number of active players in the region, both from the capital markets perspective that we've been discussing, but also from an M&A perspective, which is where I've seen the majority of the activity thus far. So from the acquirer's perspective, you've got players such as Amanat. If you think of education and healthcare, you know, they're investing there. Cleopatra Hospitals in Egypt are acquisitive. Mediclinic, Asta, who you've mentioned. So there's a number of acquisitive healthcare companies. But IPO wise, so we recently advised on the sale of 60% of UEM Medical to Mubadala, and I'm sure we'll see further investment in the sector from them potentially. In 2020, obviously across the board, I think you know, capital markets activity was not where we'd have seen it before, but we did see the private equity fund. I'm going to pronounce these names really badly now, so I apologize. As Azdihar Management acquire a minority stake in Al Taysir Healthcare Group, and then probably the transaction of the year was Fahad Al Khatta's Almeida Healthcare sold itself to Cleopatra Hospitals. There's also some talk of some up and coming IPOs, which I'm sure you're aware of Speed Hospitals and Alpha Medical. And then back end of 2019, actually, we helped Ramada IPO. So they're just a few of the transactions that, you know, we've seen in the last couple of years. But I do start to see now, you know, more of the M&A side of things on the uptick.
Thank you, Gemma. Yeah, I mean, M&A is really busy, it's really hot at the moment. A lot of activity in that space. And perhaps, Mansoor, if I can come back to you and just segue back to kind of more mainstream thoughts about generally, you know, where other experts plug into transactions like this, whether it's M&A, whether it's just a general restructuring, or whether an organization has an eye to an IPO. You know, when you're doing feasibility studies, this is not just you're going to produce a report, hand it over, and that's it. There's far more to it than that, I know. So just talk us through kind of the steps of you know, what experts like you do in terms of process and where you can add value to these transactions.
Yeah, I think there's two aspects. One is if you are looking at M&A or IPO and other, then you are looking at what is the value of the business. So you're looking at the valuation, and valuation, when we are looking at valuation, is not just a financial valuation which we are looking at. We are also looking at the brand value. What is the brand value associated for some of these established companies, and how much delta you're going to get on the valuation of that. I mean, being also worked before joining Collier in one of the big four, the traditional model is that you ask for 10-year historical, you know, audited account, and for the you know, M&A and other, or management and account and air. What we focus, or people like us focus, is now more, I think, is that what is the sustainability of the revenue? What they have done it last 10 years, great, but what is the sustainability of that revenue? That is we focus on. We focus on what are the growth, and if this is sustainable, how, if I'm coming as an investor, I'm looking what is the growth prospect. So what is the, basically they are the growth growth strategies they have it. Either they are growing, I think Isabel has said, growing into different region. Are they willing to grow into different region, or they are basically looking to grow into different specialities or subsector and other. And so I think that's quite important thing which we, so sustainability of the revenue. Beside, obviously, there is more and more focus now that what is the corporate governance there is, especially if you look at the healthcare, most of the healthcare businesses which went for IPO also, they were started by a doctor or a family, and people wants to see that once it go to the public, and if this father figure is no longer there, is the business is still sustainable or not. Important thing which we looked is also is that here in the region, lot of healthcare businesses are doctor dependent, and if the doctor leave, you are basically expecting a lot of business to also go down. So we also look at what is the dependence, whether the brand is more stronger than the doctor or doctor is stronger than the brand. Because if the doctor is stronger than the brand, then you are a sort of a hostage to the doctor. I won't go into the detail. We obviously not disclose the name. We looked at one of the hospitals, operating hospital here, where one doctor who is head of one single department makes more money than the entire hospital, because he has basically what you call it, a commission based structure agree with the hospital, and he makes more. So I think that's very important is when you're going for a public or somebody is acquiring you, that you're not sort of a hostage to a group of doctors and other who can basically bring down your business. And I think, Andrea, one more thing which is very important, which you touch base, and we are working a lot with the COVID. There's a lot of medical wellness focuses now there across the region, where healthcare providers are working with hotel operators and trying to bring it that medical wellness. It is actually COVID has put this thing more in an advanced stage, but this was the need anyway, because unfortunately in the region we have one of the highest diabetes level in the world, highest obesity in the world, and hypertension in the world, like all of them, which were unfortunately, if you look most of the GCC and Egypt countries, they are in top 10, and that require preventive health care. And that is where you have to blend the medical wellness into medical side, or medical into wellness side. And this is something we have worked in last 1 year, probably 8 or 9 projects, which are going to basically start construction and other. And I think one more thing which I do want to highlight is telemedicine, not just the typical healthcare doctors and hospitals and beds and other. Different technology, which so telemedicine, always there was a room for it, but patients also were like, okay, if I have a diabetes and I have to go every 3 months to refill, I will go and see a doctor. But COVID has basically you realize that you don't need to go there. And so I think one of the few things COVID is that telemedicine and other, they are here to stay, even when gradually, hopefully in couple of years. I don't think COVID will disappear in a year or so. Gradually it will disappear in couple of years or reduce. So the things which are advanced with relating to the telemedicine and other, I believe they are here to stay, and they will basically going to grow more than what we have seen it. And you will have, and we expect you will have a lot of these medical tech companies which we will going to work together in next couple of years, where there is a merger and acquisition and IPOs of this medical tech company, of just talking about hospitals and clinics and these things. So I think that's where I see the market in next few years: medical wellness, medical tech companies, and center of specialization.
Thank you, Mansoor. We couldn't agree more from this end. I mean, healthcare is undergoing a massive transformation, and what we will see now is an increase in use of telemedicine, which is regulations being updated almost on a daily basis now, allowing more use of telemedicine, e-prescribing, home delivery of medicines, the whole prevention, discussion, and the wellness discussion. And which one of us wouldn't want to go to a 5-star luxury resort, to work on our wellness and our health and fitness, rather than going into hospital for some awful operation. But as we move through the panel discussion, we've kind of indirectly segued through the Q&A session as well, and through the questions that have come in from delegates. Thank you so much for your questions. We've tried to deal with as many of your questions as we can, and we've corralled them all into themes so that we've dealt with all of your questions. But one point that's come up throughout the session, and Andrew, you're responsible for raising it, is ESG. Okay, so some of us are asking, what is that? What is ESG? Why is it so important for us going forward?
Okay, that's really interesting. So I actually have a pro bono hat that I wear as well. So I'm the chair of the Middle East Investor Relations Association, which is about promoting investor relations and corporate governance best practice around the Middle East. And a lot of that is communication with the asset management industry, the investment industry, and disclosure there too. And one of the major themes for companies to get out to the investment community is what are their ESG credentials, and what does ESG stand for? Environmental, social, and governance. And essentially, it is something that certain investors have always thought about. Everybody has their different reasons for investing in a company, whether it's friends and family, whether it's heart, passion, return on investment, or it's just something that you're interested in. And obviously, 10 years ago, if you were particularly up and interested in the environment, then you would have looked at environmental-based companies, whether it's clean energy companies, et cetera, But what you're seeing now, and I can use the energy sector as a really good example, is the classical old school energy companies, the BPs, the Shells, the Aramcos, they want to be able to attract investors that are interested in environmental and social and governance issues. So they're actually changing their businesses to actually have an ESG element. So you'll find that the biggest development areas for the classic energy companies, the real old school energy companies, is in clean energy, and it's reducing their carbon footprint. So effectively, the ESG momentum has gone from a very sort of small, sort of almost a kind of hippie, you could call it a sort of a hippie part of the community, where I only want to invest in that because they don't have a low carbon footprint. I'm not going to invest in an airline because they use up far too much fuel. Now what you find is they're actually going, well, I will invest in XYZ airline because what they're trying to do is to reduce fuel exposures and invest in more fuel efficient aircraft, and we're going to push the aircraft manufacturers into creating more fuel efficient aircraft. So there's a huge knock on then within the whole sort of economy that is being driven by these ESG factors. And one of the things that we've actually just done a webinar with the UK Minister for Work and Pensions, because the UK brought in legislation literally about 3 months ago that mandated that all the pensions in the UK must take into ESG factors when they're thinking about investing in various companies as a pension provider. Now, that is an immensely huge development, that effectively all pensions based in the UK have to take into account environmental, social, and governance factors when making an investment decision. All of that is actually around the COP climate change conference, which is due to take place in Glasgow in October. So all of that is backing off this environmental sort of push. And you're seeing environmental factors being on the front pages of pretty much all the newspapers now. It's such a big thing that it's not just about a small element of the investment community. It's about companies reacting to what investors want. And it's really interesting that environmental started, probably the E in the ESG was probably the most important factor. G has always been a factor, the governance piece, because it's actually mandatory if you're a listed company to have various minimum governance requirements. But the social has always been a little bit wider. What does social mean? And it's such a wide definition. It's sort of effectively, what's my footprint within the community of which I operate? And so what you're finding is companies that are actually taking these ESG factors and basically making it the parameters of how they they operate. And then obviously that's attractive to potential investors. Gemma, I'm going to push over to you at this point because
I was just going to wave just to say, yeah, I'd like to add a point on that because it's something I'm particularly passionate about, and also is very core to HSBC around sustainability. So first, we've got the commitment as HSBC, a global institution, in terms of our net zero carbon emissions by 2030. We've then got huge funds allocated to funding that relates to mainly the environmental part of the ESG, so solar, etc. But also, any buildings that are using particularly green materials, etc. Then, the lending from us is actually cheaper, and it also goes on their accounts and has other benefits because, as you know, corporates now have got big commitments around ESG, particularly on climate. And then for HSBC also, I run a number of CS programs, corporate sustainability programs for, well, I should start by saying our corporate sustainability agenda is around future skills and employability. And therefore we've got two amazing programs, Tower and Next Gen 10, which is all for the young around entrepreneurship skills, learning about the sustainable development goals and helping bridge the gap between sort of academia and the corporate world. Again, back to your point around how we support in the communities in which we operate. So I just wanted to say how what you were saying was relevant to HSBC and what we're doing.
Well, there's a live example. That's it. You've got it right there.
Perfect. And on that note, we're just coming up to time, so we will start closing the session. I'm going to ask each of our speakers in turn to leave us with their final thoughts. So, and you'll just have just 1 minute each, or less. Mansoor, starting with you, if there's one piece of advice that you could give any of our clients and friends of Altamimi in terms of these transactions, what would it be from your perspective?
I think there's not one, two. One is that because of the healthcare business, as I highlighted, family owned and other, so there should be a very strong corporate governance which will carry on the business if you go to M&A and other. And I think the most important thing which we are looking is, again, this what I just said was, what is the sustainability of your current business and what is your growth strategy, both in terms of diversification and regional expansion. That's what, if you're going for M&A or you're going for an IPO, that's what the investors are looking. I was less than a minute, I think.
That's perfect, Mansoor, thank you. Gemma, from the bank's perspective, what's the outlook and how can the bank support?
Yeah, I think the outlook is, as we've all said, looking pretty strong for healthcare. In terms of bank support, I mean, as unexpectedly for an international bank, there's all sorts of financing solutions, from M&A advisory, IPO, bond issuances, and then vanilla financing for capex and so on. But I think the working capital in healthcare also is where we can really help out and be creative. So yeah, but the one piece of advice is coming back to the bit about engaging your advisors early, including banks, lawyers, accountants, etc., about your strategy well before you're thinking about these events.
Thank you, Gemma. And to our two Tamimi experts, lawyers are always, use 10 words instead of one, but final thoughts.
Yeah, final thoughts. Look into your business every now and again, really on a regular basis. A lot changes. What works for you also changes and evolves. What was right for you yesterday may not be the best way for you going forward. So, be proactive, and if you need help, reach out to any of your professional advisors, and we're here to really help you modernize and continue to be successful and to be even more successful going forward.
Andrew, final thoughts.
Yeah, it's a nightmare being the last one because everybody said all. So I guess my first piece of advice would be, please speak to Andrea, Mansoor and Gemma if you're...
Love it.
And then come and speak to me and Isabella. Really, to be honest, Gemma, you stole my thunder. It's about
Sorry.
preparation. It's about preparation and literally managing expectations as well. Having an understanding, an expectation around valuation, timetable, and preparedness.
Thank you. And final thoughts from me to sweep up. I lead the healthcare practice, so what I would say is apply the prevention and wellness theme to your businesses. Make sure that your businesses are healthy and in a good state to move forward, whatever you decide to do, whatever growth you want to achieve, whatever structure works best for you, if you have ambitions to list. Be prepared, put your house in order, and to everyone who's joined the session and to our speakers, thank you so much, and I hope you all stay well and healthy, and we hope to see you all in Dubai very soon. Thank you.
Thanks, everyone.
Thank you. Thank you very much.
Bye.
Thank you. Thank you.
Bye.
Bye. Bye. Bye.
Bye.